Today's episode is going to be very short and sweet about why should we be looking at tankers as an investment. Don't forget to do your own due diligence. This is a continuation from the last episode with Mr. Skonieczny. Yep, I was practicing his last name so I don't get it wrong this time.
Welcome to Financially Free Podcast with your host, Nay Torres. One of the reasons Nay could retire when he was 25 years old is because he was coached by the best. And now, through this podcast, so can you.
Let's talk about tankers today. Tankers seems to be something that at the beginning wasn't that interesting because it's been such a lousy business for probably decades. Why do you like tankers?
Because everyone else hates them.
Good answer.
Well, the tankers, yes, you're right. It's when you're reading about what constitutes a good business, business with a moat, business with a brand, tankers are not any of that. They are a commodity. So what's interesting about the tankers is that they are a very cyclical business, and they go through periods where they do really, really bad, and they go through periods that they do really, 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 really good. And the last time there was a upcycle in the tankers was between 2003 and 2008. And during that time, investors made incredible amounts of money if they bought it close to the bottom. But when the good times are here, the industry tends to overbuild, order new ships, and then the demand for tankers gets out of whack with the supply of tankers. And that's exactly what happened between 2003 and 2008. The order book reached as much as 50%. So as a result of this, along with the 2008 financial crisis, the last 10 years have been absolutely terrible. It took the industry almost 10 years to go through the oversupply of tankers. And these tankers, they have a finite amount of years that they can be used for transporting oil. You can't have tankers that's 30, 40 years old. So naturally, with enough time, enough of the tankers will get old, they will get scrapped. And that's exactly what happened during the last 10 years. And while this was happening, the industry obviously became smarter and stopped ordering new ships. So by 2019, the balance between demand and supply started to come into balance, and the rates for what the tankers were making started to go up in 2019. And as a result of this, the stocks started heavily to the upside. And then, of course, the coronavirus hit. And at first, they sold off heavily, and then realized that the tankers are good because of the overproduction of oil that had to go into the storage and into the tankers. Consequently, the rates for the tankers went sky high. But the stock prices didn't really respond that well in relation to the rates because people were petrified that eventually the storage was going to end and we're going to have destocking causing the rates to go down, so they heavily sold them off. But I think right now we're at a point that, and I did an interview with the CEO of Scorpio Tankers yesterday, we are at the point where it looks like we're going to destock a lot faster. The demand for oil is going up very fast as people are getting out of their homes, traveling more, driving more. And I think the next a month or two, people can be surprised what's going to happen with the oil tanker stock prices.
So will you say Scorpio is your favorite stock, or do you have a portfolio of equal amount of tankers?
I don't have a favorite. To be honest, tankers is the first time that I ever invested in a basket. Usually I invest in individual names because I have conviction in individual names. And in this case, I don't have a conviction in individual names, but I have a conviction in the sector overall. And I just feel more comfortable having 5 of them portfolio versus just one.
When you say, I saw a video you made where you analyze the cost per tanker that each company have done, which is really good. Would you say a price to book is a good metric of undervalued?
Well, I would say that's probably the best method that's available to us. In other words, what it is that we're paying per ship, because the earnings and revenues for individual ships and therefore for these companies in general, they are so volatile that how can you even value them based on some kind of earnings multiple or anything like that? So I think that the best way is to buy because when you're buying these oil tankers, you're really buying a portfolio of ships. So the way I see it is, if you buy the ships for much less than it costs to build them, or in terms of older ships, which is you include depreciation in it, and that's what value is. If you buy it for less than the value and you have a long-term horizon, on average, they should earn enough money so that the present value of the future cash flow will be more than what you're paying today, these ships.
That brings me to my next question: is when do you know you're fairly valued in such a unpredictable sector?
Right. So what you can expect from shipping is unpredictability and volatility, right? You can expect that you're going to have bad earning, and because now the balance, the supply and demand is very favorable, I think that it's a good bet that over the next 5 years you will have some good years, and I don't necessarily see a lot of bad years. We might see some average years, but I think overall we're going to see more good than bad. And based on that and some back of the envelope calculations, it doesn't take a genius to realize that paying price. For example, if you look at a company like Teekay Tanker, over the last 9 months, they earned their entire market cap. So, it doesn't take a genius to realize it's cheap. And I don't have to be a super size. I just have to know, yeah, it's cheap. I'm okay buying it at this price.
So when do you come out? When do you exit for the next idea? Or when you see it?
Exactly.
Uh-huh.
Exactly. I'm gonna hold it for as long as I need to. If they double, triple, I might take some off the table, write the rest. I don't know. When the time comes, I'll see. But selling in general, I think it's a lot harder than buying.
Is your portfolio comprised of these 9 companies you analyze on the videos?
Pretty much. I have another one that I didn't analyze yet, so I'm not going to be revealing it here.
Okay, no problem. Sounds interesting. We have talked about in this podcast before about tankers, and there you go, guys. Now you get it. Pretty good thesis, but it's gonna be a bumpy ride. Anything else? Where can people find you, by the way?
Well, I have a website, classicvalueinvestors.com, and then I have a channel. You go to my website, you can just easily find it, and then I'm on Twitter. That's pretty much the 3 platforms that I use the most.
Well, thank you so much. I'm definitely following you, and I'm reading all your books. And again, thank you for your time.
Yep, thank you.
Did you learn something today? How can you apply your insights? What's next for you? The fastest way to make things happen is to just share this podcast episode with more people that may find it valuable too. Talk about it with them and surround yourself with like-minded people. Hope you found this valuable. Don't forget to subscribe. See you next time.
This podcast references opinions and is for information purposes only, not intended to be investment advice. Seek a duly licensed professional for investment advice.